On June 12, 2026, a company that had never sold a single share to the public officially became more valuable than Walmart, more valuable than Coca-Cola, MasterCard, and ExxonMobil combined, with room to spare. By the closing bell, investors had added roughly $300 billion to its value in a single day. And unlike most companies worth that kind of money, a huge part of SpaceX's valuation depends on businesses that are still years away from proving themselves. That company is SpaceX. And if this valuation holds, Elon Musk could become the first trillionaire in history. But here's what I couldn't stop thinking about. Is Wall Street seeing something everyone else is missing? Or is it pricing in a future that's nowhere close to arriving? Let's actually break it down. Numbers, not hype. What actually happened? On Friday, June 12, 2026, SpaceX began trading on the Nasdaq under the ticker SPCX. Shares were priced at $135 each, putting the company's initial valuation at roughly $1.77 trillion. By the end of day one, the stock had jumped about 19%, closing around $161. SpaceX raised approximately $75 billion in this single offering, making it, by a wide margin, the largest IPO in stock market history. Not the largest tech IPO, the largest IPO, period. And in an unusual move, SpaceX reportedly set aside up to 30% of shares for retail investors, roughly 3 times the normal allocation, meaning everyday investors, not just hedge funds, got meaningful access from day one. On the surface, that's an enormous success. But the deeper you go into the numbers behind the number, the messier the story gets. The case for genius. Here's why a lot of serious money thinks this is just the beginning. And this is where most people misunderstand the company. SpaceX is best known for rockets, but Starlink now generates more than half of the company's revenue. That's important because public markets rarely hand out trillion-dollar valuations for launch businesses. They do hand them out for recurring revenue businesses, and Starlink increasingly looks like one. Then there's the AI angle, and whether you think it's real or hype probably depends on how much faith you have in Elon's broader ecosystem. SpaceX has been merging with xAI and positioning itself as infrastructure for the AI boom, including leasing compute capacity from its data centers to other AI firms. In a market where anything connected to AI commands a premium, that's not a small detail. Then there's the total addressable market argument. In its IPO filing, SpaceX stated that the industries it could eventually touch add up to roughly $28.5 trillion. That's nearly the size of the entire US economy. If even a fraction of that opportunity materializes over the next decade, a $1.77 trillion valuation could look surprisingly reasonable in hindsight. And market demand seems to support that view. The roadshow reportedly drew enormous interest, pushing pricing toward the top end of expectations. One well-known Wall Street commentator even floated the possibility that SpaceX could eventually become a $5 trillion company. If Starlink keeps compounding, if Starship becomes the backbone of the space economy, and if the AI strategy works, then $1.77 trillion may end up looking less like a peak and more like an entry point. The case for gamble. Now let's look at the part of the story bulls would rather not talk about. That's because one number keeps showing up in almost every skeptical analyst report. SpaceX generates less than $20 billion in annual revenue. At a $1.77 trillion valuation, investors are paying somewhere between 60 and more than 100 times sales, depending on which figures you use. For context, most expensive technology companies trade closer to 10 to 20 times sales. SpaceX is operating in a completely different universe. One prominent market analyst didn't hold back. He described the IPO filing as unserious and pointed out something brutally simple. SpaceX is being valued at roughly twice Walmart's worth, while generating less revenue than Macy's. And this isn't just internet criticism. CFRA, one of Wall Street's major research firms, issued a rare sell rating immediately after the IPO, with a $115 price target. That's below both the IPO price and the first day's closing price. Their concern centers on Starship. A significant part of the SpaceX growth story depends on Starship evolving from a development program into a commercially reliable transportation platform. And while progress has been impressive, the vehicle's history still includes multiple high-profile test failures. Then there's Starlink itself. SpaceX's filing places Starlink's addressable market at roughly $1.6 trillion. Morningstar estimates that number closer to $129 billion. That's not a small disagreement. It's a gap of more than 90%. Morningstar's base case gives SpaceX only about a 7% chance of justifying even a $1.3 trillion valuation through its space-based data center ambitions. It also estimates a 43% chance that strategy fails outright. Then there's governance. Because of SpaceX's share structure, Elon Musk reportedly controls around 85% of total voting power. Public shareholders can participate financially, but they have very little influence over how the company is actually run. If you think ownership should come with meaningful control, that's an important detail. The Wildcard. Here's what makes this IPO genuinely different. If the valuation holds, Elon Musk could become the world's first trillionaire. Not in a theoretical on-paper sense, not based on some private market estimate, through an actual publicly traded stake. That's never happened before. And it immediately turns SpaceX into something bigger than a company. It becomes a political issue. Within days of the IPO, Senator Elizabeth Warren was already calling for greater scrutiny and discussing wealth tax implications. There's also a quieter detail worth paying attention to. SpaceX is reportedly allowing some insiders to begin selling shares before the traditional 180-day lockup expires. Historically, early insider selling is something professional investors watch very closely, regardless of how management frames it publicly. And zoom out for a second. SpaceX isn't the only mega private company heading toward public markets. OpenAI and Anthropic have both reportedly filed confidential paperwork for IPOs this year, which means 2026 could end up being remembered as the year AI, space, and public markets collided all at once. The history lesson. To understand how unusual this is, it helps to look at the closest comparison we have, because this is where the comparison starts to break down. Back in 2019, Saudi Aramco briefly crossed a similar valuation range, but Aramco was backed by something fundamentally different. At the time, it was the most profitable company on Earth. It generated tens of billions in profit every quarter. It owned enormous proven reserves. Investors weren't paying for a vision, they were paying for cash flow that already existed. SpaceX is almost the mirror image. By its own admission, the company has a history of net losses and no guarantee of future profitability. A meaningful portion of its valuation depends on things that haven't happened yet. Starship reaching full commercial reliability. Satellite-to-phone services scaling globally. Space-based data centers becoming a real business instead of an investor presentation slide. The last time investors assigned a valuation this large, they were largely paying for proven cash flows. This time, they're paying for projected cash flows. And that gap between reality and expectation is really the entire debate. What to actually watch next? Instead of choosing a side today, here's what will actually tell us who's right over the next 12 months. First, the lockup expiration. Around December 2026, early investors and employees will be able to sell shares more freely. Watch what insiders do when that restriction disappears. Their actions are often more informative than any interview. Second, Starship. A huge portion of the bull case depends on Starship becoming routine rather than experimental. Every launch between now and year-end is effectively a referendum on a significant portion of SpaceX's valuation. Third, the first earnings report. The IPO filing gave us a snapshot. The first quarterly report will tell us whether Starlink growth and company-wide profitability are moving in the direction bulls expect, or in the direction skeptics fear. And finally, AI sentiment. Part of SpaceX's premium is now tied to its AI infrastructure ambitions through xAI. If AI valuations cool across the broader market, SpaceX could feel that pressure, even if its core space business performs exactly as planned. So, genius or gamble? Here's the uncomfortable truth. Both can be true at the same time. SpaceX could absolutely become one of the most important companies of this century. It could dominate satellite internet, redefine access to space, and become a foundational layer of future AI infrastructure. And the stock could still be dramatically overpriced at $1.77 trillion today. Because the market isn't simply betting that SpaceX succeeds, it's betting that SpaceX succeeds faster, bigger, and sooner than almost any company in modern history. That's the real bet. Not, will SpaceX do well, but will SpaceX do well enough, fast enough, to justify being worth more than ExxonMobil, Walmart, and Coca-Cola combined, starting right now? So was Wall Street brilliant, or just willing to suspend disbelief?